Good evening, everybody. This one's just now being pulled into the garage to get cleaned up. Trying to figure out where we could stick some chrome on this one. All right. Oh, Marsha, unfortunately, I don't have to worry about that. I don't let him go very much. Oh, South Padre, we have just about less than 5 minutes from here. There was a church parking lot on one of the main roads. Years ago, would let classic cars come show up on every Friday night. Um, During the summertime. Well, they've built larger parking lots. They get somewhere around 1,200 to 1,400 cars every Friday night. They think it's the biggest classic car show in the nation of its kind, which is a weekly thing. So I take cars down there, and I was telling everybody last week one of our clubs had a show on Sunday, and I took the 56 Cadillac up there, which is in just absolutely pristine shape, pulled in, and one of the first cars I passed was a 1956 Cadillac in pristiner shape, just immaculate. Anyways, I was let down. All right. Yeah, that's right. Okay. I still see people kind of logging in. So as we can see, after they broke out, we've had some few days of good cranking to the upside on the Dow, which is not unexpected because remember, the further this trend stays in progress, the more everybody gets excited and starts piling back in, which is usually the sign that we're getting near the top. Now, that doesn't necessarily mean this is the top, but I bet you we're going to see some profit taking here pretty soon, or they bring it back down to the T line at least. Notice how we're kind of moving away from the T line. So I would be prepared that if you see a big day again, probably want to start pulling stuff off the table, or at least go to your 10-minute chart to see if it's time to start taking some profits. The Nasdaq up nicely. The S&P did kind of an indecisive day. Let's make this a little bit bigger. But note where we are. We're still need to see the confirmation that the sellers are in control. Right now, not only can they not get back below the T line, but they can't even close it back below the 3T line, which means the enthusiasm is still, or the force is still pretty strong in this uptrend. Transportation index, same thing. Even though we had an indecisive trading day, we definitely need to see it close below the 3T line uh, to let us know they're coming back to test the T line. So nothing really affecting the markets out there. Crude oil prices, well, they climbed back up a little bit. We probably would need to make this chart smaller. There we go. We're still in this slow upward trend, but the big word here is slow. It's not really affecting any of the psychology as far as people getting into the markets right now. Let's see, crude oil, gold. Gold took a little bounce back up after breaking out of this wedge. still having a little bit of a difficulty getting back up above the T-line. So depending on how they open it tomorrow, if they open this lower, they're still taking this down in a bearish J-hook pattern. Silver did a little bit more bullish confirmation, staying up above the T-line after a little cradle type pattern. But as you can see, there isn't any real great enthusiasm so far. Hello, Victor. We're still in this kind of this declining channel. Let's see, what am I doing? I've been buying, whoops, feeder cattle ever since it did the little morning star signal with the doji gap up. Only had one scary day, which was here, but I had one very simple criteria. If it closed below the T-line, I was back out. That meant the trend channel was going in this direction. As you can see, they're still trading this one higher. Along the same lines, let's see, that was, oh, I'm sorry, that was cattle, live cattle. Feeder cattle, same scenario. When it did this little morning star, notice the bullish Harami doji, and then he took it right back up above the T-line. This is today's trading. Now, I took some profits today from this move, which was fairly hefty, but got back into the trade. And let's see, let me show one more to show why I took the profits and then got back in. And this is lean hogs. Let's make this also this little morning star type signal, still trading in a strong uptrend. Robert, the charts that we look at tonight are daily charts, but we're going to just right now flip to why we took some profits. The reason I took profits is notice where our stochastics are. And notice what the price did today. They gapped it up. So they gapped up in an overbought condition. So either they were breaking this out or this was exhaustion. Didn't know during the day. And as you can see, today they actually closed this up the limit. And they're trading a little bit higher after hours. But when this was trading up 170 or $1.77, that's when I was watching my oh boy, let's see if, oh, right here. I started watching it come back down, and this was the 10-minute chart. I could see that on the 10-minute chart, we were starting to get a little bit soggy up here. We weren't doing a J hook. So with the 10-minute chart telling me I'm getting a little bit soggy, to get a faster read, I flipped to my 5-minute chart. 5-minute chart is now coming back down through the T-line. So I'm taking profits right in here, even though my 10-minute chart isn't quite to that level yet. At least I know that if it comes back and supports here, I can always get back in. Well, I was out for maybe 30, 40 minutes this morning, and then it came back up. So when it started looking like it was coming back up, once again, I flipped to the 5-minute chart, and if the 5-minute chart is telling me, yes, they're starting to buy, I'm coming back in and buying. The reason for that is if my 10-minute chart, whoops, let's go to the 10-minute chart. We're way up in the overbought condition, have a huge big day after it gapped up today. But if they were trading back down below here on the 10-minute chart, what's my risk-reward factor? Well, my risk factor is I'm back below the 10-minute T-line. They could start taking this down and creating a big shooting star after they've gapped up. I don't want to give back all of those profits. But at least using the 10-minute chart, I can say, all right, I want to come out. If they turn it around and take it back up, I can always get back out in, which they did. And as you can see, they took it up the limit. Now they're trading up above it after hours, just above that level. So this is kind of a protection measure for me to hold on to my profits. I don't mind closing here and buying back here. Gave up a little bit, but that's no big deal to me. I'd rather give up a little bit of potential profit than give up profits. Going to make a trade on lean hog. What time frame are you following that prompts you to stop your chart session during the day. Just curious what time frame you are following that prompt you to stop your chat. Oh, yeah, during the day or during the chat session, it was on the 10-minute chart and the 5-minute chart. The 10-minute chart started looking like it was curling back up. And so I real quick flipped to the 5-minute chart. 5-minute chart coming back up. So I bought some right in here. I bought some more in here. And at the same time I was buying feeder cattle, I was also buying live cattle. Same scenario. When it, I think this was right. This is a 5-minute chart. It was a 10-minute chart. 10-minute chart came up, bounced off the T-line, but then came back down through. So I closed out the position. But after watching it for 30, 40 minutes, I could see that they weren't taking it down. They were starting to bring it back up. Flip to the 5-minute chart. 5-minute chart told me they were coming back up again. So I'm buying back in. Again, I probably got out. Oh, I don't know where I got out. Probably made a little bit of extra money on the cattle, but the whole point of this exercise is to keep me from holding on to my profit or giving back my profits all the way down. I'd rather take profits and get back in when it was time to get back in. Did you choose right after the red candle? Probably during a red candle. That if this came back down, was trading back down through here, I might have closed out the position. And I don't remember when I actually did it, whether I closed it out here or closed it out here. I'm pretty sure I closed it out here because I was watching this thinking, all right, is it time to get out? And they turned it right around and took it right back up at that time. How would you have day traded the 3 stocks? Oh, I wouldn't have probably, Ron, I'm not a day trader. Not so much that I don't like to day trade. I just don't have time to day trade. But you can use the 10-minute chart just as well. Or if it all depends on how fast you want to be trading. And if you're trading the E-minis, you might be using a 1, 3, 10-minute combination. If you're trading soybeans, you might be using a 5-minute, 10-minute combination. Yes, I use the 1-minute chart to enter and exit a trade. For example, let's say, for example, I want to get back in right here. My 5-minute chart confirming or telling me my 10-minute chart we're starting to get ready. So if I am buying my 5-minute chart, did I do this right? I think I just do something up drastically. That's just a fine howdy do. See if I can do this. There we go. All right, let's say I'm buying right here. What I want to know is, I don't know whether I can correlate this because I go to my 1-minute chart and I have no idea where it is. But what I wanted to find out is if my 5-minute chart is setting up and I look at my 1-minute chart, it's just now starting to roll over. That means maybe it's not time to buy just yet. I want to see that if my 5-minute chart is setting up and my 1-minute chart is telling me that it's still heading up, then I'll buy. Jim, can you help Joseph? Why wouldn't you look for a setup on a 1-minute chart? Because a 1-minute chart may not, I mean, it may be just a blip up and a downtrend, or it might, yeah, the 1-minute chart is too quick. I want to see what the overall trend looks like. on my 10-minute chart, then come back and get it confirmed with my 5-minute and then my 1-minute. Okay, let's see. A few other commodities that look good right now. If I can get back to where I was supposed to be. Notice coffee. Once coffee came back down through the T line, had one day where they took it up and they brought it right back down. That pretty much told you that they weren't going to take it back up. If you were short and you covered, you re-shorted, because where should this not be trading if this was in an uptrend? Definitely not back below the open of that day. I don't know. Let's see. If I look at the 10-minute chart, then confirm with the 1-minute, I find I have missed a decent part of the move already. Well, what you're trying to do is see if the 10-minute chart is setting up, and then you go and check your 5-minute chart and see if your 5-minute chart would kind of further confirm the setup of your 10-minute chart, and then you flip down to your 1-minute chart to see if that one was setting up or still confirming the 5-minute chart. I'm doing up the 3-minute 8 or 3 exponential T line 5-minute, 10-minute entry and exit strategy. We'll be doing that within the next probably the next 2 weeks on a Wednesday night. Okay, all right. Let me zip along here, and we'll see. Soybeans, not really doing too much of anything. Wouldn't be shorting it just now because we're getting toward the oversold area and at the support level. So it looks like soybeans is just sideways. Wheat has more of a potential of reversing and at least bouncing back up to the 200 or the 50. Let's see what else. The dollar came up, failed at the 200, pulled back, and notice the Morningstar signal off the 20. Makes it very simple. If they open up positive tomorrow, they're going to be going through the 200, more upside. The euro, same scenario on the downside. Looks like a J-hook pattern to the downside. And the Japanese yen is still just sideways. I wouldn't be trading that one at all. Okay, in this type of market, even though we've got days where they're not really enthusiastic, it doesn't keep you from getting some good price moves. Now, first one's what it does is it keeps our steady eddies. Oh, no. Let me try another one. Okay. We recommended CMRX a few days ago because of the J-hook pattern coming back up through the 50. We want to stay long on this one. AMKR. Well, Shuzbutts, I think. Yeah. SEM. SEM also coming out of, oops. Kind of that little J-hook pattern after the breakout. So this one you want to continue to hold. As a matter of fact, you could be still buying this one on a positive open tomorrow with the doji sandwich setup. Mankind has been touted in the chat room quite a bit. There's that slow curve or fry pan bottom. The breakout right here. Let's make this big enough where we can see it. Kind of a doji sandwich breakout. Let's make it small enough where we can see it. Some profit taking on Thursday, or it was Friday, now Thursday. This one you still stay long. Any of these you stay long as you don't see it close below the T line. SLCA, nice steady eddy. PES, nice steady eddy. And the reason I show these is these are the type of positions that we all want to eventually get ourselves into. If we could have a portfolio of 10 steady eddies, it would take a lot of anxiety out of your life every day. Because they're just producing good, steady profits. You don't have to make any major decisions on these other than the fact that if you see a sell signal and a close below the T line, you close out the position. CPE, CPE gapped up today. Now, this is a gap up in the trend. Stochastic still coming up. This might be where they start moving it pretty fast, telling you it's time, getting ready, time to take profits. Because, again, where does the enthusiastic buying come in, or where do most people buy? They buy exuberantly at the top. But there, yes, and that's, we're going to get to how we kind of see, for example, how we detect whether it's steady eddy is starting to set up. This one is more of a J-hook pattern. This is PXWL. There's that big morning star signal, came back up above the T-line. Same trajectory as what the wave one was. I would suspect this is going to the 820 area before slowing down. IMPV. Little double bottom here. Notice kind of the doji sandwich. This one can still be bought. This one still has the potential of popping pretty quick back up to the 50-day moving average, giving you about a 30-40% return. NQ. There's the doji gap up. Notice the pullback, still relatively indecisive. This one you definitely want to be buying on positive trading. They came right down with this doji, touched the T-line. If it opens positive, the next target is going to be up here at the 50-day moving average. And this is just because this is how human nature works time after time. And here we were staying long in XON ever since it broke out with a doji sandwich. The only concern was right here, telling us that if they open it lower and close it or traded it lower the next day, they were coming back to the T-line and doing a J-hook. They did a little bit of selling off. It came right back up, which tells us they can't even get this to close below the 3T line, let alone the T-line. ISIS has moved nicely ever since it gapped up out of here. This is what we call the stutter step. Had a strong signal, or inverted hammer, gapping it up, stutter step, another strong signal. Now they're up through the 50. This one, if it opens positive tomorrow, you definitely want to be buying because we know what the next target's going to be. And AFOP. AFOP. Observe the obvious. The obvious is we're in an uptrend. Every time it gets back to the bottom of the trend channel, they took it right back up again, telling us the obvious is they're going to take it to the top of the trend channel. ANIC was one that had bought calls on Friday because it was trading up a little bit higher on Friday, but notice the fry pan bottom with the anticipation that they were going to break this out to the upside, which they did. And this was a case where taking off half the position up here was the prudent thing to do because it was some good profits. But this one still has upside potential. If they open this positive tomorrow back in the profit-taking area, it means they're going up further. The 3T line, JG, helps you get in and out of positions. When you start moving away, when you get away from the T line, the 3T line starts kicking into effect. Nothing yet. Tomorrow, if they open up positive That tells us they're still taking it up. Now, on the other hand, if they open it lower and start bringing it back down, if it closes below the T-line, your fry pan bottom is still in effect as long as they don't close it below the T-line. Now, obviously, Apple is still in a nice steady eddy with, what was a 6-for-1, 7-for-1 split. That that one just tells us that as long as Apple keeps moving higher, they aren't going to sell this market off. And AXAS, another one that we recommended because of the kicker signal. This one you stay long. Notice when they gapped it up the second time through this level, that tells us there's going to be, they got a kicker signal and another gap up, a doji that traded positive. They open this positive, you still want to be buying this one. You're going to be, got your double bottom, got the potential of another wave of this magnitude. Yeah, the 3Ts kind of tells you that if you start moving away from the 3T as well as the T line, start watching for some profit taking, because that means it's really getting stretched out. We had a kicker signal, smack dab off the 50. Then you had a gap up through this little resistance level. So you've got a kicker signal, a gap up doji, a positive open after a doji, all indications of bullish sentiment. If they open this positive tomorrow, you want to be buying, because that should be the result of this, especially with a double bottom type situation. We got a wave 1, wave 2, now heading up into wave 3. This one is wave 1. Now, it doesn't matter what, on a wave count, I'm counting this as wave 1. You can count this one as wave 1, wave 2, wave 3. All we know is we're going to be in an upside move, and then once we start seeing sell signals, then we can deduce whether this was a wave 1 or this is the wave 1. We just know that there's going to be about that same magnitude on the upside. Doji sandwich, there was one right here, which wasn't as important because we were up here in the overbought area. It just kind of told us that there was still a lot of strength in this uptrend. And WWAV is another one that has the steady eddy look to it. And it started with a kicker signal down here. Moved sideways. One important element that you can see visually is they couldn't close it below the T-line. Okay, man, we're not even halfway through. I'm going to kind of try to buzz through some of these. TKMR, this one you get ready to buy if it opens positive tomorrow, telling us that the T-line or the 50 is not going to act as resistance anymore. GOL is probably going to be on the recommended list. There's your flutter kicker signal from the oversold area. They start trading this positive, especially if they break out through this downtrending channel. There's your wave 1, wave 2, wave 3, starting with that flutter kicker signal. Anytime you see a flutter kicker signal, you definitely want to take heed, because that's usually an indication that the bulls are coming in with a lot of strength. GWPH, this one's probably a very good option trade. Another flutter kicker signal coming out of this slow curve, and you're right here at the resistance level. If this opens positive, potential move of this magnitude, which would be 25 points. Let's see, VLRS. There's that little J-hook type pattern with a doji. You want to be buying this one on positive trading. The reason I recommend the patterns, like the fry pan bottoms, because we know what the results are. Usually very strong price moves. And not only very strong price moves, with not the fact that you also have strong price moves, but it puts you in situations that if the market's moving up, these pattern breakouts are going to have extremely strong price moves versus stocks that are just kind of steadily moving up. So kind of the old, we want to make hay while the sun shines. You want to find the best chart patterns to take advantage of an uptrending market. SANM, flutter kicker, breakout. This one you definitely want to be buying on positive trading. MGNX, there's that slow fry pan bottom, and you've just climbed up above the 50 with a doji. Very simple. If they open up positive, you want to be buying immediately. There's a good possibility they can take this back up to the first resistance level, which would be essentially a good 35% upside. AAV we recommended a few days ago because of the fry pan bottom breakout. This one you just stay long as it doesn't close below the T line. And HOLX, another nice fry pan bottom. You're right at the breakout level. If this one opens positive, you can be buying. Now, that's a lot different than buying a signal, which you're expecting to be in the oversold area. When you're buying a pattern, you're usually going to be in the overbought condition. What determines a breakout? The fact that they're right back up to where the pattern started. So if they break this out, that means they're breaking out through this resistance level, and the result is usually a very strong price move from that point. Is a fry pan bottom versus slow curve? You can call it whatever you want. In this case, it's big enough to say it's a fry pan bottom, but it doesn't matter whether you call it a slow curve. Now, a slow curve usually is a much faster, maybe a 4, 5, 6, 7 day result, where a fry pan bottom, as you can see, is almost a month long. So the fry pan bottom have to be flat. Now, sometimes they're what I call obtuse, which means they're a slow curve like this, getting ready to break out to the upside. NRP, there's a scoop type pattern. Hammer, bullish engulfing, doji, little doji sandwich, gap up through the T line. This one you want to be buying, especially if it comes up through the 50, because they'll take that up to the 200 pretty quick, based on the slingshot effect coming out of a scoop pattern. There's your left-right combo gap up. Doji sandwich, there's lots of power in this right now, making the 200 your likely target. Ooh, butter. Probably not what I'm looking for. Well, somehow I've done something very wrong here. What's happened? I don't think that one was it. It's not a bad looking chart. I was looking for the slow curve. Slow curve like we saw in ITMN. Now this is what I call a slow curve, much faster and usually during the uptrend. RNA also. It's a little slow curve J-hook. Notice what it did. A doji gap up through this resistance. Tells me that if this is wave one with about 5 points, that should take me up to about the $16 area. And so part of the package we're putting together right now, the convergence package, is being able to put everything into place where we can see the fry pan bottom. We can see that they broke out through the 50. We're right at a resistance level. We did a doji. If it opens positive, everything says we're going to do a doji sandwich, about the same magnitude as this. And it tells us we've broken out through this level, that we definitely use the 50 as support, that we're probably going much higher. So this is where you add up all the elements that you can see visually almost instantaneously and decide which positions to be putting on the next day. Let's see. POZE N. Same scenario. Had a doji, stayed above the T line. We're right at the breakout area. They opened up positive. What happens when they break out? Well, you don't have to be a candlestick investor. If you're just a trend investor or a resistance investor, once you see it break that resistance, you're going to be buying. We know that if it opens positive after a doji, we want to be buying immediately. Yeah, Achilles, we do have the convergent package. What I'm doing, though, is I'm doing a video that kind of puts all the elements where it was we kind of jumbled it all together for the presentation. Now I'm going to take the three aspects of convergence. One, the psychology or the let's say the common sense applications of candlesticks, the signals. Two, the enhanced signals and the meaning of or recognizing higher probability trades like the doji sandwich or the left-right combo, that type of thing. And then three, the other indicators that you add as they're all coming together, whether it's part of your moving averages, the T-line, the T-line crunch, all that sort of thing. So it's going to kind of spell it out piece or step by step. Let's see. Posing, yeah, it doesn't have to be. Notice that it's still coming up here to this resistance level with buy signals. But if it broke through here, that's going to be the breakout. Where do the breakouts usually occur? When your stochastics are probably up here in the overbought condition. And SGMO, same scenario, kind of a little indecisive day just above the 50. Fry pan bottom. If they opened a positive, doing a doji sandwich, telling us that this all was disappearing as far as resistance. They're going to take it higher. There's a gap right here that more than likely could be the next target. Let's see. Can't even read my own writing. BIOF has a nice looking chart, except the volume's a little bit light, right just on the fringe of having to be careful. But that one's now broken this downtrending channel with a morning star signal. This one you can be buying on positive trading. We recommended DYAX a few days ago because of its J-hook pattern. The morning star signal, smack dab on the T-line. This one you continue to hold as long as it stays above the T-line with a great anticipation that it's going to go through this level and have this same type of percent move probably up in this area. There's a gap right here, so that'd probably be your next target. And especially moving from this area to that range, you're probably looking at about a 30% move. Let's see, on CLDX, well, now this is still more of a fry pan bottom. Yeah, usually a blue lace failure is when something fails, pulls back, comes up right away, and refails. We also recommended OREX, the J-hook pattern, morning star signal, smack dab on the T-line as well as the 200. What's our simple analysis of the support and resistance levels? If they break a resistance level, they'll come back and see if it's going to act as support. If it does, you know you've got a very strong price move. Let's see. Oh, I got a whole nother column here. No, these are all the J-hook patterns that look attractive. PHX, I'm sorry, PAH. Well. PAH. Nice J-hook pattern. 20 to 27, 26 to 33. I'd be a buyer of this on positive trading using the T-line as your stop. TGTX, nice J-hook pattern off the T-line. RFMD, not as much of a J-hook, well, it's getting there. Both of those seem to have been trading in tandem. Go-Go, there's your kind of your J-hook slow curve. This one I wouldn't be afraid to be buying on positive trading. Obviously, it needs to get through the 200 fairly quick. And TTPH, perfect J-hook pattern. There's your inverted hammer Morningstar signal. If it opens positive, we know our first target is the 200-day moving average. And if this is wave one, that means the 200-day moving average probably is not going to act as resistance. TXTR, another nice J-hook pattern. And this is pretty much telling us a story. They took it up through the resistance. They came back down, used the 20 as support, went back up through the 50. That tells me our next target is the next major moving average. And there's a few more here, but they're all pretty much the same old, same old. We recommended SMCI the other day. There's a J-hook pattern. There's kind of your trend kicker signal. This one you stay long until you see a sell signal. All right, this market is giving us the opportunity to take advantage of the charts. As you can see, it's been a very slow, rocky, meandering market, but for the last 3 weeks now, it's been nothing but up. Now we just have to be careful that we don't see some profit taking. If this was the resistance level, it wouldn't be surprising to see the market pull back, which would also kind of correlate with the T-line up here, pull back to see if this resistance level is now going to act as support. Let's see. So does it matter if a doji sandwich is in overbought or not? What is the significance? Well, obviously, the doji sandwich is more potent if it's in the oversold area. But if it's in during the trend, I'm trying to think of one. If it's in the trend and not exclusively way up in the overbought condition, it still means there's going to be more upside. Marty, that's what we'll do one night in our scanning, how we sort through, how we narrow it down by taking, again, that's part of the convergence, is how many elements can we add to each chart to improve the probabilities that not only are we going to be in an uptrend, but a very strong uptrend. So we're gonna go through that. What did I say? We're going to do the 3T T-line for the members, and then we'll probably do the scanning and sorting for the best trades not too long after that. How do you tell? Pretty much by what it's doing in the past. Which one was it? Oh, I think this one is pretty much telling us that it's a steady eddy, that it's not going below the T-line. It's not, when it moves away from the T-line, it pulls back, moves away, pulls back. It's just telling us it's in a nice steady eddy. This one I would give a steady eddy. Now, steady eddy is something that's not moving exuberantly, just kind of consistently moves up or down, and every time it moves back, it uses the T-line as support and moves back up again. After a while, you can pretty well understand or see that the uptrend is in progress. There's times when you might come out of it, but then you get right back in it, because as long as we're in an uptrend and they don't close it back below the T-line, or if they close it back below the T-line and bring it back up above the T-line, it means your uptrend's still in progress. I would like to know, the big boys run out of money. Does this have, the big boys won't run out of money. Remember, you've got billions and billions of dollars sitting in the bond market at very low interest rates. If interest rates start moving up, that money is going to come out, and it's only got one place to go, and that's into the stock market. Every time a stock gets stretched from the T-line, should we get out even if the stock has moved upside movement, like Ford? No, not necessarily. Depends on your time frame. Now, if this is a long-term hold, uh, yeah, I wouldn't be worried about the zigzags back and forth. If you're trading this, which I wouldn't be because it doesn't have as a big move, but yeah, the logic says if they open this lower and start trading down, they're coming back to the T line. But this is where I would also flip to my weekly chart and see what the weekly chart is doing and what the monthly chart is doing. Monthly chart is still telling us that we're in a J-hook type pattern, that if we've moved from 10 to 18, we should be moving up into about the $22 range here pretty soon. Oh, Joseph, you still got to remember, there are tons of people out there that are negative on this market. That's why you're starting to see a little bit of strength, because everybody that's been short is finally realizing this market is not turning around. They're getting squeezed. Oops, how do I do this? They're starting to get squeezed. And we don't need to know that, Joseph. All we need to know is what is the market doing, not the who's and whys and no, this is just a kind of a steady, slow, steady uptrend. A T-line crunch, T-line crunch, T-line crunch. Oh, where was one? Oh, I bought calls on PEIX because that's a T-line crunch. Notice how when they hit the 50, they pulled back, but the T-line wouldn't let it close below the T-line. The T-line kept crunching the price up, right up into that resistance level again, and broke it through. Would you buy a Steady Eddie? Len, I'd like to have 10 Steady Eddies in my portfolio. That way I could be doing whatever I want to during the day. As long as they stay up above the T-line, I don't have to make decisions. Now, the best, oh, I forgot which ones I bought. June 14s on this one. Let's see, they're terrible. Yeah, economists. Um, yeah, that's why. That's why God made economists, so they could make weathermen look good. Okay, Jim, let's go ahead and do the double line. Ah, and then 3.7 seconds. Let's do another double line. EWC Canada, stay long on this one. There's that slow curve breakout. At least they're going to take it right now back up to the top of the trend channel. SCIF, small caps. All you can do here is stay long until you see a sell signal confirmed. GDP, this one's gotten flat. Remember, the bigger the signal, there's your big, huge left-right combo. If this one opens weaker tomorrow, you want to be out of this one. They're probably going to be moving sideways, waiting for the T line to catch up. I'm not the T line, the 50-day moving average. GTAP, another one that I wouldn't be long or short. That one's now just gotten itself into a sideways mode, and you're still stuck in the channel. I'd find something else to play. SUNE, same scenario on this one. Or maybe I got the charts too small. Same scenario. We're in a sideways mode. Nothing to show. This one should have confirmed, and it didn't. They closed it more than halfway down this candle and back below the T line. I'd be someplace else. And EXPD, hold on for a second. Okay, EXPD, getting a slow curve. I wouldn't buy it just yet, but I'd put a buy stop. If I was looking to buy, I'd want to see it trade back up here toward the top, knowing that J-hook pattern was starting to break out. LMT, this one I would definitely be a buyer on positive trading tomorrow, because that tells me this level is not acting as a resistance. More than likely, this trend channel is the next target. JC Penney, we're getting the write-up on this one pretty much spruced up thanks to Ed C. Why I'm thinking of it, since this is a long-term pick. This one you can be buying as long as it keeps this little slow uptrend right now. And our WLL, just stay long on this one. You can see the fry pan bottom setting up again on this one as a long-term pick. In our long-term pick area, we will have the bigger picks. We're going to have smaller stocks that might be brand new industries or new technology. We'll also be doing some reports on which sectors we want to be looking at over the next 3 to 6 to 12 months. Which ones might have the most upside prospects. Tweeter, you can buy this one on positive trading tomorrow. Stutter step is over. We're still looking for a filling of this gap at the 50-day moving average. Then see what it does after that. Goog, nice J-hook pattern. There's that morning star signal, right smack dab off the 50. Up through the 50, back to active support. They're going much higher with this one. And if they're going higher with Goog, the market's not going to be selling off. Amazon, I would stay long on this as long as it doesn't close below the T line. And SPLK. This one, you can be buying this one on positive trading. You definitely want to see it break this downtrending channel, obviously. Making the 50-year next target. And STB, S.STB. Student transportation. This one is, I don't see any trend in this one at all. I'd be owning something else. Hero had a nice little breakout today. This one you can be buying on positive trading. Just make sure your volume is all right. Rice got a little bit soggy today, but as long as it stays above the T line, you stay long on this one. TRXC. That looks like a little fry pan bottom with the dimple. This one you continue to hold as long as it stays above the T line. And HART, stay long here. That's a good looking chart. Natty. This one got through the 200. more than likely they're going to come up and test this level, watch for a sell signal at that area. They'll come back, see if the 200 is going to act as support. If it does, then they'll start taking it back up again. VTNR, this one you want to be going short if it opens weaker tomorrow. They've got kind of that kicker signal to the downside below the T line. I would at least look for the first target to be back to the 50-day moving average. And CMG, just stay long. That's a steady eddy. Stay long as it stays above the T line. Whoops, that didn't want World Sugar. You wanted Suncor. That's a nice looking chart. I wouldn't be afraid to be buying this one at all on positive trading tomorrow. ICLD. This one you get ready to buy on positive trading, a fry pan bottom and a doji sandwich setup. Ruckus got a little bit soft today. It needs to stay above the T line, and it needs to get the trajectory running pretty strong again. As you can see, there's kind of a resistance level right in here. It needs to break through that so we can get up to the 200-day moving average. RFMD, want to stay long on this as long as it stays above the T line. Whoops. There's the slow curve. That's the one I was looking for. Son of a gun. Slow curve, this is what we expect coming out of a slow curve, is that pop. That's why this slow curve, if they open this positive, you can see a pop to the upside. PetSmart. I had to go to PetSmart to buy the darn cat a collar with bells on it, which doesn't do any good. She's still bringing in a bird a day. This one you buy on positive trading tomorrow off your double doji. Let's see, we did Twitter. Let's take a look at the. But this is a perfect example of if you're in an uptrend and it closes below the T line, and the next day they do a kicker type signal back up above the T line, don't be so proud that you don't want to buy it right back again, because what's our very simple rule of T line? You're in an uptrend as long as it's trading above the T line. Oh, Kiwi. Kiwi has a very nice chart. Another J-hook pattern. As a matter of fact, Kiwi is probably going to be suggested as a trade for tomorrow, because if this is wave one, this should take you up into the $60 range. I know, Jim, you get so mesmerized by my exciting voice. Doji sandwich. This is a case where if it opens positive after doji, you've got the potential of the same move here. But the nice thing, again, about candlesticks is it puts you in situations where if there is a big move in the making, you're probably going to be able to identify it and not identify the potential of it. This is a good looking chart. IPI. I wouldn't be afraid to be buying this one on positive trading tomorrow, anticipating wave 3. AFO. S.AFO. Whoops, that one's not found. Q2. Just stay long as don't see a sell signal to close back below the T line. This is kind of your classic chart, where do most people sell? They panic sell at the bottom. Where do you grab for the fallen knife? That's what the bullish Harami tells us. The selling has stopped. Then confirmed. So this is a perfect example of why you want to use the candlestick charts. Facebook. Facebook right now is stuck in the sideways mode. See if we can make it more exciting. That can't even make it more exciting. If this opens lower tomorrow, more than likely you're coming back to test the 200, which is the bottom of this trend channel. If it opens lower tomorrow, I'd be out of it. If you want to be in this, you put your buy stop right up here. If it breaks through this level, now you know you're in the next wave. And I say that because I would rather give up the potential from here to here, which right now from here, right here doesn't tell me where we're going. If it breaks out through here, I've got a good probability of this going this way. But owning it right here, I've got three things that can happen. It eventually moves up, continues to move sideways, or moves down. So there's nothing here that puts the probabilities of being in this trade in my favor at this point. DDD, you stay out of this one. There's just no movement to it. You're sideways. Walgreens, you stay long as this stays above the T line. The Russell, stay long. You broke the downtrending channel. You can see how it was resisting, and then you had your left-right combo, and they blast through it. XOMA. Let's make this bigger. Let's see. Hold on for... Oops. Let's see. XOMA, stay long. This is going to the 200. Rice, we did GRMN. And GRMN, you stay long as it stays above the T line. There's your J hook. Your J hook had enough force to take you out through this level, and it's still going to go higher. BWP ran out of steam. This is why when you see something close back below the T line, you close it out. Worst case scenario is that if it supports on this level, you'll see the buy signal. You can always buy it back. But right now, there's no reason to be in it. Potash, nothing here. You stay short until you see a buy signal and a close above the T line. GGAL, stay long. Notice the Morningstar gap up. Broke through this area. You're in wave 3 right now. You've still got about another 2 points to the upside on this one. And Vivus. Vivus has a good looking chart. We're right at the breakout level. I would put a buy stop right above today or yesterday's high. If it comes up through there, it's telling us that they're not worried about the 50-day moving average anymore. Bank of America, yeah, finally coming back up. First target is going to fill this gap. When it does, just be careful. It might come back and use the see if these moving averages are now going to be acting as support. Netflix, evening star signal in the overbought area makes this very simple. It has to stay above the T line. If it doesn't, you close out the position. CRTO, get ready to buy this one if it comes up through the 50. kind of have a little scoop type setup. ENDP, nothing here. More than likely, if they can't get this up above the T-line, they're taking it down to the 50. Please show and explain the opening positive looks like. Well, let's see. What one would I be looking at if it opened positive tomorrow? Very simple. I don't want to, if I'm going to buy this on positive trading tomorrow, first of all, I don't want to wake up and see that the market, the pre-market futures for the Dow are down 100 points. That tells me there's not any buying going on. Secondly, if the market's opening positive, I don't want to see this one opening down here. That doesn't tell me the bulls are there. I want to see it open somewhere in here and start trading positive. Now, if it opens right here, that doesn't bother me. I'm not going to buy it. But if it starts moving up and comes up through the previous day's open, I'm sorry, the previous day's close, what's this forming right here? Another little green candle, which tells me there was profit taking on the open and the bulls were stepping right back in again. Yeah. Let's see, we did Rice, Tesla. Tesla's caught, still in this channel. I'd be out of this position, and I'd put a buy stop right here. If it came up through here, that tells me the J-hook pattern's in progress and the downtrending channel has been breached. SPWR, another one that I'd be out of because it's moving sideways, caught in the sideways channel. Needs something to show the bulls are into control. Yeah, the turkeys come down. We have starting to get some deer coming back down again. PSX, another one that's, I don't know what this thing is. Another one that's just sideways. If this opens lower, you definitely want to be out of it because that means it's probably moving sideways, waiting for the 50 to catch up. Yeah, she doesn't, fortunately doesn't bring in snakes here. And fortunately, there's not that many snakes here, except the electrician who was putting up lights up in the trees so we can see up the hill at night was up on the ladder, and right below him, about an 8-foot black snake crawled out of the tree. So he went home that night with the snapping turtle out of the pool and was chasing the 8-foot black snake around. OCN, just stay long as it stays above the T line. We're not sure. Let's see. Sometimes I just mutter through them. Yeah, you can be buying this one, but I'd be buying on positive trading, and I'd use the halfway point of this candle as my stop. You don't want to see the selling bring it back down through that level. The SPY might have a little shooting star, but we're still trading above the 3T. We're still in an uptrend, obviously. Union Pacific, stay long on this. Not an exciting stock, but as long as it stays in an uptrend, you can stay with it. British Petroleum. Whoops, that's the British pound. British Petroleum. This one's got nice little bottoming action. You can be buying this one on positive trading. Again, use the T-line as your stop. Let's see. I think we did all of those. We didn't do quick. Quick, if this one opens lower, they're bringing it back to the T-line. Probably want to take profits and then see what it does once it gets to the T-line. And AFEX. Oh, man, that one stopped working. Still not working. All right. And GE, picked up a little steam here, but a little steam for GE is still kind of a nothing move. As you can see, it's in an uptrend, so all you can do with GE is just stay long as it stays above the T line. That's right. Well, both the deer and the turkeys are now getting to the point where I can drive in, get out of the car, and they won't move. They'll just sit there and watch me go into the house. This one you can be buying. There's your doji sandwich after the breakout. You can be buying. Just watch what it does once it gets up here, and just make sure you got tons of volume in an 80-cent stock. MTW, this one you stay long. I don't know whether you'd be buying it. You can still be buying it. They're going to fill this gap right here. So at least if you bought it, you still have a little bit of running room to get back out if they turn it around at that level. And NVDA, ever since the little gap up, kind of J-hook, stay long, but you definitely would like to see it break out through this level. And what's the length of these Monday sessions? I think most people think they're probably way too long. But I've discovered that most of the people watching it are watching this in bed because that way they don't have to even move. They just fall asleep right where they are. AFOP, you want to be ready to buy this one on positive trading. The Qs, same as the NASDAQ, a little bit toppy up here, but nothing to show there's any selling pressure coming in yet. Potential, but not. You still need to see that sell pressure. FX, all you can do here is stay long. And we did the SPY, right? Yes. SPY is getting a little bit toppy, but as long as it stays positive, stay with it. Okay, I guess that's it for tonight. We are getting people signing up for the session, the private sessions at the lake. So if you need information on that, get with us. We're probably only going to do 2 sessions this year unless we get a lot of demand. But the first session you'll fly in where you come up August 9th. We do 2 full days, the 10th and 11th, and then do the scans for the best trades on the 12th. I think those are the dates. And then the second session, you fly in on the 13th. We'll go the 14th, 15th, and halfway through the 16th. So with that, everybody have a good evening. We'll see you in the chat rooms tomorrow.